What's going on, everybody? Let's go. I wanted to come on here and go live for a few minutes. Let's do some Q&A or something, man. Let's talk. Let's talk. Opening up my chat right now, so give me just a second. Give me 1 second here. I'm just trying to make sure I can get to this chat. Give me 1 second, guys. All right. Sorry about that. There we go. I just had to get the chat working. How's everybody doing? Man, I hope everybody's having a great week so far. It's Thursday, about 1:20 a.m. People are probably getting ready for London. And man, I just wanted to jump on and do some Q&A, make sure everybody's got their questions answered and everybody is ready to go and kill it tonight. So, man, I just got back from the Philippines, and man, I was on a mission trip, had an amazing time. Saw just amazing things while I was there. Got super sick. It was crazy. Thought I wasn't gonna make it or something, and but man, I made it home. Been down for a little bit, but now I'm feeling a lot better. So it's time to get back on the grind. So who saw the most recent video that I dropped? How many people saw that that Death Cross, Golden Cross video? I've been getting a lot of good feedback on that. People have been saying that that's helping them. I want to try to do a few beginner type strategies like that, because I feel like, you know, it's a lot out here. You know, you can go out here and watch 1,000 different videos, and you can see a lot of different things going on. And man, it's pretty tough. It's pretty tough because you know, when you start to see like all of these different things going on, when you see all of these different strategies and stuff, it can kind of become like where it swims, you know, and it's hard to follow all that stuff. So what I want to do is I want to kind of bring back some basics. I want to bring back some real simple basics. So over the next few weeks, I got some really cool videos that I'm bringing out, heavy educational content that's going to bring you back to like the basics, you know, back to what works, you know, not over your head, not only for advanced traders, but like if you're new or if you're still struggling, these videos are going to help you. You know what I mean? So that's what I really want to see happen. I want to see beginners win. My goal for the rest of this year, I've made like my own personal my own personal little goal is I want to see beginners win, right? I know we've been hearing that it takes time, and yes, it takes time. I know we've been hearing that, you know, it takes years to master this. And yes, that's true. It takes years to master this. But I'm making it my business to make sure that beginners get paid too. All right. So I'm literally taking on the burden myself to make sure that beginners get paid too. You know, you ain't got to be an expert to make some money. Now, I'm not telling you you're going to make millions of dollars. I'm not promising all that stuff. You know how to, you know, these disclaimers they make us say, you know, past profits are not indication of future return, all that kind of stuff. But man, the truth is, if you will just be disciplined and you will get after it and do the right things the right way and do the right thing again tomorrow, and then when you wake up the next day, do the right thing again, ultimately you're going to find yourself in good positions. Most of us lose because we find ourselves in bad positions, chasing the market or too late on your entry, too early on your entry, too tight on your stop, you know, things like that. So if we can eliminate some of those bad circumstances and then bad positions, beginners can get paid too. So if that sounds good and you're ready to see the beginners make some money out here, man, just let me know in the chats. I want to see the beginners make some money out here, man.
I don't have an answer for that.
Even Siri wanted to, you know, look at that. Siri trying to talk too. So let me look at this chat real quick. Uh-oh, I see Daniel talking about trading gold, baby. I like it. Let's see. What's good, Zion? What's good? What's good? All right, so check it out. Here's what we're gonna do. We're just gonna take a few minutes before London gets started. And what questions do you have? What can I help you with? I know that there's been a few questions in the comments, and I'm gonna get to some of those. But if you have any questions, man, drop them in the chat. Let me see, you know, is there something I can help you with? One of the questions that I know that keeps coming up is it's about stop losses. So I've been getting a lot of questions about that. And hey, Clutch MacGyver, he a member of the channel, the TGP Club Access here, the channel club. Shout out to you, Jeff. Appreciate you being a part of the channel. Shout out to you. For those of you who want to get special emojis, little extra phone, what do they call that? Phone screens, personal shout outs in the videos, little stuff like that. You can join the channel. It's not no big membership, not no trading membership. It's just basically an upgraded version of YouTube for this channel, and it's only like $2. So you can go on there and check that out. Clutch, appreciate you, my bro. So so check it out. So people are asking about stop loss. I have a whole video. Now look, I know there's a lot of people that talk about stop loss and it's real basic. You know, make sure you use a stop loss. Make sure that you protect your downside. Make sure that you know, use proper risk management. But most people don't even know what proper risk management is. They tell you to use proper risk management, but really all that means to them is to use a stop loss, you know? And so I got a whole video coming out this week that is a stop loss strategy. Like, I'm telling you, nobody's putting out a strategy just on a stop loss. I'm giving you a whole long form video this week that is going to give you a strategy based around your stop loss. It is a whole strategy for your stop loss that is going to just absolutely boost your trading big time. No doubt about it. So stay tuned for that. But one of the things I will give you a little clue on is I actually just had a trade this week where I set my stop a little too tight. Man, forgive me, it's pre-London. But I set my stop a little too tight and I took an L on a trade, but it actually went in the direction that I wanted it to go. Man, that was frustrating. So because of that is what made me make this video that I'm dropping this week. So I'm going to show you that on that video. But for now, let me just tell you this. One of the keys to using a stop loss is that you have to understand the basics. You got to understand market structure. You can't just put a stop loss anywhere, you know. You can't just, like, if you see this move right here and you're looking to take a trade, you can't just come in here and say, here it is, I'm gonna put a stop loss, you know, at the end of here. That's that, right? Because sometimes the market moves against us and then it goes, which is exactly what happened to me the other day in this loss that I took. What we really want to do is we want to look previous to structure, and we want to say to ourselves, number one, we got a wick right there, but really number two, we have that there. So if it goes beyond that structure, then I know it's a whole reversal. So what I want to do is I want to make sure by looking left that I have enough meat on this bone that is going to be worth it to take that trade beyond that stop loss. So in this case, that's a big risk, you know, that's a really big risk. Oh, hold on. Let me see. You're saying you can't see my screen. It's showing on mine. Hold on. Can you see it now? Can you guys see my screen? Type a 1 if you can see my screen. Let me give you just a second real quick to type. All right, perfect. Yeah, sorry about that. I thought it was on my screen. On my screen it was showing. So if you were taking this trade right here, you know, we can't really just stick a stop loss right here. And that's really kind of what I did the other day. I was a little too tight on it and I got stopped. So you really want to look back to structure, right? You want to come back here to this structure area and you want to set your stop just below that structure. And then you want to make sure that you have enough meat on the bone on this trade for that trade to make sense. Now, that's a lot of risk. So you have to adjust your stop loss according. That's the other question I get all the time. People are like, I probably get this question every day. They say, like, and they give me their account size. They say, like, okay, if I have $1,000 account, let's say, what lot size should I be using? And I tell them, you're already asking the wrong question. That's not the right question. We can't just base a lot size on an account size. I know there's a lot of people out there that's teaching it that way, that you just take your you know, if you have $1,000 account, you should be using a $1 lot size, 5,000, $5, 10,000, $10. Like that's not real trading. That's not how things work. You can't win that way long term. It's going to take you forever to compound. And here's the reason why. Because most of the time, if you're using a dollar lot size, and let's say you're going after 20 pips, you're going to make 20 bucks. Well, that's cool. That's nice. That's wonderful. But if you're risking 20 bucks in order to get 20 bucks, then that just doesn't make sense to me, because that means every time you take a loss, you're wiping out a win. But instead, what would happen if you did this? If you go into a trade, let's say you're going to take a trade, okay? Let's say you're going to take this sell right here, boom. And you come back here and you look at this candle and you say to yourself, my stop loss is going to be 1.5 times this candle. So here, you know what? Let me get off of gold. I'm on gold, so let me get off of gold. I want to use pips rather than points. This way it's a little more clear. All right. So let's say, for an example, you're going to use this trade right here. Okay. So you come in and you grab this entry right here. You're going to do 1.5 times your stop. So let's say you're right about here, 25 pips or so. And you're going to come down into this area right here. You're good to go. Here's the thing. I can't just say $1 lot size on a $1,000 account. That's not realistic. You can't win that way. All right. So what I'm going to do is I'm going to come in here and I'm going to take that 25 pip stop loss. So if I have a 25 pip stop loss and I'm going to risk 1% of my account. Now, some of you like to risk a little bit more than that. Maybe you like to risk 2%. I remember when I first started trading, I was risking 5%. And honestly, that's real aggressive. I made a whole video about that and I won, but that's real aggressive. I do not recommend 5%. I recommend 1% risk. So the first thing you have to do is you have to ask yourself, what is a 1% risk? So if you have $1,000 in your account and you divide that by 100, that's going to come up with $10. So now you know that you want to risk $10 in your trade. So if you come in here and you put $1 lot size and you got a 25 pip stop loss on this trade, you are now risking $25. $25. So now you're risking 2.5% of your account, 2.5%. You might only really want to risk 1%, but now you're risking 2.5% plus broker commission, plus spreads, plus fees. So really, you're probably risking 3% of your account by using a flat dollar lot size. So what should you really do? What should you really do? Well, you should take that $10 and you should divide it by the number of pips in your stop loss, right? So if you take 10 divided by 25, what is that going to come up with, right? What is that going to come up with? So, excuse me. So if you do that, then you should be using a 40-cent lot size, which is really a 0.04 lot size, okay, which is 40 cents. You should be risking 40 cents per pip, and that is a 0.04 lot size. That puts you at 1%. That puts you at 1%. That's how you can be consistent, because now it doesn't matter about the pips. It doesn't really matter about how many pips it is. It matters only because you're risking 1% no matter what. It doesn't matter if it's 5 pips, 10 pips, or 100 pips. You're only risking 1%, right? So now, guess what? If you take that and you make sure that your risk to reward is a minimum of 1 to 2, so now let's say you got this 1 to 2 risk reward. So I'm risking 25, but I'm going for 50. All right. I'm risking 25, but I'm going for 50. So that means that every time I win, that equals 2 of my losses. So that means that every time I take a loss, I'm only wiping out half of the profits that I made. That's a recipe for success long term, because you're setting yourself up to win. You're setting yourself up that for every loss, you have to have 2 losses to wipe out 1 win. Now, if you're losing 2 trades to every 1 trade, something is not going really well, because that means you're only trading at about 33% accuracy. Now, that's not really very good. But if you can bump that up to 50% accuracy, here's what's amazing about that. If you can bump that up to 50% accuracy, so if you take 6 trades in a week, so you take Monday, Tuesday, Wednesday, Thursday, Friday, like that, Sunday night, Monday, Tuesday, Wednesday, Thursday, Friday, you take 6 trades, 1 a day. All right. if you have 6 trades and you go 50% wins, here's what's going to happen. You're going to win 3 and you're going to lose 3. So guess what's going to happen? If you start out with $1,000 and you win 1, now you're up 2%. You lose 1, now you're up 1%. You win 1, now you're up 3%. You lose 1, now you're up 2%. You win 1, now you're up 4%. You lose 1, now you're up 3%. You went 50-50. You won as much, you lost as many trades as you won, but you're up 3% in your account for the week because you use proper risk management. And that is how you make a trade plan. It's not about the strategies that you trade. It's not about which strategy is best. All that, like a lot of strategies can just be 50-50. But what I'm telling you is that if you use the proper money management and the proper risk management, understanding that lot size is so vitally important. It's not about just taking $1 because you got 1,000 or $2 because you got 2,000. That's setting yourself up for disaster. And you're cheating yourself because most of us are not taking 25 pip stop losses. Let's be real about it, right? Most of us are not eating a 25 pip stop loss. A lot of us are scalping. So what we're doing is we're coming in and we may have like a 5 or a 10 pip stop loss at most. So if you have a 10 pip stop loss on that same account, well, guess what? Now you can take that dollar lot size instead of a 40-cent lot size. Now you can take that dollar. So you come in with that dollar lot size, and now you go and you're risking $10 to get 20. Now that money can start to compound because losses aren't wiping out wins. Or what about if you're really scalping, like real true scalping, risking 5 to get 10, you know, jumping on that 15-minute chart, which is what a lot of times that's a good way to trade. You're risking 5 pips. That ain't nothing. 6 pips, something like that. You might even be able to use a $2 lot size. So you're cheating yourself out of profits because you're using a flat lot size, $1 because I have 1,000. That's bad teaching. They shouldn't be teaching you that. They should be telling you to do the math, do the hard work. Don't be lazy. Do the hard work. Those people who are telling you to do just a flat lot size like that, that's lazy. They just don't want to do the math, or they're just not good at math. What I'm telling you is do the math a little bit. Use a calculator. You ain't got to be a genius. Just do the math. Count how many pips are in your stop loss and divide the total dollar amount that you're willing to risk by the number of pips that you have in your stop loss. That gives you the proper lot size to risk 1%. And if you do that, now you use that 1 to 2 risk reward and you are putting yourself ahead of the market. It's gaining extra leverage that you were not already afforded. It's gaining leverage that you don't have to pay for. That's fire, guys. So I want you to do that. I don't want you to go in there and just risk a flat lot size. I want you to go in there and I want you to take and do the math. Does that make sense to everybody so far? It makes sense to just do a little bit of math. That's all I'm saying. The people who don't want to do the math, you know, you're just looking for the easy way out. I'm being honest with you. You're just looking for the easy way out. And man, you came to the wrong field, man. Forex ain't about easy way out. Forex is about working. Forex is about doing things the right way. So, you know, that's the lot size question. I get that question every single day. What should my lot size be if I have $1,000 account? I had somebody ask me the other day, what should my lot size be if I have a $200 account? And I'm like, honestly, you can't really do no more than like 10 cents because no matter how many pips you count, you know, you're really only trying to risk $2. So if you have a 10 pip stop loss, I mean, you might be able to risk 20 cents a pip, you know, like that's where you're at. So, but you can't be risking no dollar because you're going to be risking 10 to 15% of your trade. Now, there are some small account challenges out there. I'm not saying they're great. I'm saying that they're out there. There's some stuff out there. There's a compounding sheet out there that shows you if you could risk 30% of your account and you could take, you could win, if you can win one trade 3 days a week, risking 30%. I mean, you could take $1,000 account and turn it into $1 million. Like that stuff is all out there. Yes. And the numbers make sense. The numbers work, but are you really going to try to risk 30% of your account? Are you really, are you really going to go and risk 30%? 3 trades and you're wiped. Think about that. I want you to think about that for a second. If you take the number that you're risking, 1%, right? 1%. That means with broker fees, commissions, spreads, everything, I have to lose about 85 to 89 trades in a row to blow my account. Now, if you lose 89 trades in a row, I'll be honest with you, man, Forex ain't for you. I'm being real with you. I'm not trying to, you know, if you lose 89 trades in a row, Forex ain't for you. You know, you might just want to go and get a good skilled trade. You know, you probably could be a really good, you know, at something else. You probably, I don't know, but Forex ain't it if you lost 89 in a row. What I'm saying is you have to ask yourself, what are you risking? If I risk 2%, that's 50 trades. But after broker fees, commission, spreads, all that kind of stuff, I got to lose about 42 or so trades to blow my account. 42 in a row. You should not be losing 42 trades in a row. But think about it. When you start risking 10% of your account, you know, with broker fees and commissions, and remember those broker fees and commissions get bigger with the more risk that you take. So that's the other thing that they don't think about when they tell you about risking more. They're not telling you that when you are risking $1 lot size or a 50-cent lot size, that your broker fee is this much. But when you go and you risk a $50 lot size, your broker fee is a lot more. You know, that spread, even if it is only 1 pip, that's a big pip, 50 pip, you know, $50 pip. So now suddenly, you know, you're risking a lot more of your account because it's not just a percentage you're putting in stop loss, but it's also the broker fees, the spreads, the commissions, all that become bigger. Okay. So what you have to understand is that if you go in there risking 10% of your account, you're probably really risking about 14 to 15% of your account, you know, maybe at least 13% of your account. So now you really only have to lose about 6 or 7 trades, you know, 7, maybe 8 trades. That, you know, that can be, you might not lose 8 in a row, but if you lose 4 and you're looking at your account half gone, and you're like, man, I had 1,000, now I only got 400 and something dollars. Now all of a sudden that fight or flight comes in, and it's like, man, I might as well go ahead and risk. I might as well go ahead and just try to get all of it back right now. And all of a sudden you're developing bad habits. So that's what I'm saying is you don't want to be doing all that. You want to have a calculated measure of how you're going to risk. And I would say you don't want to be trying to blow your account in 5 or 6 or 8 or 10 trades. You want to have to blow 80 trades to blow your account. You know, that gives you so much cushion. If you get on a real bad week or something like that, maybe you're just not there, man. Maybe things are just whatever. You know, we all have bad weeks. Maybe you're sick, you're tired, you're overworked, whatever. And you come into the charts and you're looking at them and you're going, man, my brain's not here. But you should probably take a step back, but you don't. You go and you trade, and maybe you lost 5 trades this week. Maybe you lost all week long, didn't even take a win. Guess what? At the end of the week, you lost 5 trades, didn't take 1 win. But you still are okay because you have to lose 80-something trades to blow your account. At the end of the day, you're down 5%. It ain't the end of the world. It's not that big of a deal. You come back the next week and win 3 trades and you got your money back. You know, so that's what I'm saying is if you can manage your risk, the right way, you're setting yourself up for long-term success, not just, you know, hit or miss, or like trying to hit a home run, you know. Does that make sense to everybody? All right, what other questions you guys got? Bro, while tracking the Elliott wave theory, wave 5 just like GU is right now, also EU. How do I continue tracking it from there? At the current position, please, how would you approach this? So GU, which time frame are you looking at? What time? I don't know what time frame you're looking at, bro. You didn't tell me that. Zion, tell me what you're looking at. You said GU. Here's what I know while you're telling me that. While you're telling me that, let me tell you about Elliott wave real quick. Okay, when you have Elliott wave, all right, daily chart. All right, cool, thank you. When you have Elliott wave, here's what we have to understand. Elliott wave is just here. Let me make it a little bit up like this, so it can easier to draw on it. When you're looking at Elliott wave, you're just looking at charts. That's all. Remember that everything is wave theory. So 1, 2, 3, 4, 5. All right. So you got 3 is the big wave, and now you're completing that 5 wave. Really, how do you trade it? Well, if it's an uptrend Elliott wave, you're looking for a downtrend on. You're looking for a sell, right? How do you know how to do it? Well, just grab your fib. It's real easy. Grab your fib. Start there. Grab your fib, and go to the top. And you see that golden zone? There you go. Trade it down to the golden zone. That's an easy way to do it right there, because it's just going to go boom. And especially once it breaks that trend line, it's going to fall. That right there is a beautiful, beautiful trade. By the time you get through that, I mean, that's going to be a lot of pips, especially if you're trading off of the daily chart. That's a big swing trade. So that's a great way to do it. Another thing you can do is you could be looking for the lower time frame. If you see that you have an Elliott wave on a daily chart, I'm probably not trading the daily chart. I'm not going to do that. What I'm going to do is I'm going to come down here. I'm going to mark out my golden zone on that daily chart, knowing that price is trying to get down to it, right? And then what I'm going to do is I'm not going to trade it on the daily chart. I'm going to come down to probably like the 30-minute chart. I'm going to do my top-down analysis from the 4-hour to 1-hour, 30-minute. And then when I come down to that 30-minute chart, I have to remember that every time that there was a wave on the daily, that did stuff on the lower time frame. So if that's the daily, then this would have been the 4-hour, right? That would have been the 4-hour. So you'd have had movement all inside of that 4-hour. You gotta love my Picasso work here. You'd have had movement all inside of that 4-hour. And so now you have even more opportunity for structure, right? It's not just, you don't have to go all the way down. So now you can take that and say, all right, now I'm going to trade it. I'm going to wait for the breakout from here. So here's my volume right here. I get my volume, and then I have, boom, levels to trade to. I don't have to get all the way down to here, you know, so I could come down and trade like that. Boom. Here you go. There's the 4-hour move. Now I could take that even further, because guess what? If that's the 4-hour, if that's what the 4-hour looks like, then guess what? Every one of those waves inside the 4-hour is also going to have waves, right? Every one of these is going to have waves on a 30-minute. So I mean, now this is going to look crazy, but every one of these is going to have waves inside the 30-minute. And so you're going to have 30-minute moves. You're going to have 30-minute moves. You're going to have, you see what I'm saying? And so now this right here had a 30-minute move inside of it. So now you could take that scalp, boom, from here to here, done. That's one trade. Wait for it to break. There's your next trade. Boom. Take it from here to here. That's another trade. Wait for here. Boom. Take it from here to here. That's another trade. And now you're doing that on the 30-minute, knowing that the daily already told you it was trying to come down to here. So you're on the 30-minute just sniping. Boom. Sniping. Boom. Sniping. Boom. Knowing that the daily momentum is going to carry you down. Right? Does that make sense? That's what we have to understand, is that we want to try to take the higher time frame momentum, but we don't necessarily want to trade the higher time frame. We want to take the momentum from the higher time frame and use it to push us on the smaller time frame. I hope that answers your question, Zion. Daniel Tuff said, do you trade news? No, not really. I do sometimes, but I don't really send trade setups out for news because I don't expect everybody to be at the same level where I'm at. I would feel bad sending out a news trade setup to beginners because I don't want them to make a mistake and I'm not there helping, you know what I mean? Like I don't want that to happen. So what I will do sometimes though is if I see that news is coming, let me grab this back. Let's say I have this, right? And here I am. Let's say I'm at a level right here. I'm just going to leave that there for right now. So I have a level right here, but I know I have a news announcement coming, like an inflation rate or an interest rate, a big one. You know, I'm not really going to trade NFP, although NFP is probably actually one of the easier news events to trade. When you come down here and you look at like GDP, for an example, you look at the forecast, and you really need to know what you're doing too. But you need to understand GDP. You need to understand durable goods. If you're trading, like for example, earlier today, we kind of knew that there was likely going to be a quarter point increase to the interest rate, right? That they were going to do a 0.25 increase. That was kind of what was projected, and that was exactly what happened. So because we knew that was coming, we could pretty much set ourselves up for a quick drop on USD before a push back up. So if you wanted to, knowing that this is the move that's expected, because we have a high or low, high, higher low, higher high, higher low. We're expecting the next move up, but right around here we have news, right? So right in this area we have news. So we're going, okay, what's going to happen? Is this going to just do what's normal? Nah, we're probably expecting that it's going to drop a little lower. So rather than just testing this area here, it's probably going to go a little lower because of news. So what can you do? You can come in here and you can set let me get off the sanitation. You can set up a sell limit right there. Boom, you set up a sell limit. You set up a really tight stop, you know, and then you can do that. So now when price goes lower than what we thought, boom, you caught a little scalp. Now, the even smarter thing to do is forget the sell. Why are we trying to sell? So the even smarter thing to do would be to use a buy limit. And I meant a sell stop, not a sell limit. The smarter thing would be to do is to set a buy limit at that level. So here's what happens. You come through in here, you set a nice tight stop that's going to get you out before anything happens. And if you know price is going to drop before it comes up, why not go ahead and catch it? So you go ahead and you set a nice little tight buy limit in here. Price is here, but boom, it spikes down. It gives you an entry. And now, boom, here you go. You got a nice early entry. Instead of here, now you're here. You got an earlier entry, and you get an even better projected entry by trading the news. However, you really, really, really need to know how to read the news. You need to know what those news events mean. If you know that there's an interest rate gathering or an inflation rate dropping or whatever that looks like, you need to really be able to understand what that's going to be. And you need to put a really tight stop on there just to, you know, protect your downside. Zion said, regarding your teaching on a triangle pattern, would you approve that GJ on the 4 hour right now is a valid triangle? Said GJ on the 4 hour. Let's take a look. Hey, somebody been going to class. So remember this, don't let the charts manipulate you. All right. You see, when I look at it like this, let me say it this way, because I don't want to I don't want to hurt nobody's feelings. But let me say it this way. You look at a chart like this, and it's like, all right, cool. You know, it is what it is. It looks kind of flat. Everything's looking whatever. I can make that thing look like what I want it to, you know what I mean? Like I can make that thing stand up like this. I can stretch it out and, you know, all of a sudden it's looking a little bit more like a triangle, you know what I mean? So don't manipulate the charts to try to make them look like what you want them to look like, right? You're psyching yourself out. Here's what you should do. Look at the charts like that. Don't try to do this and this. And don't stretch them up and down like this. Here's what I want you to do. Just come back and hit that little reset and look at it like that. See how that moves when you do that? Now that's a legitimate deal, right? Don't try. I guess my point is a little pro tip. Don't try to manipulate the charts to make them look like what you want them to look like. Just use the charts the way they are, right? So if this is a triangle, let's think about this for a second. Oh, sorry. My computer went crazy there for a second. We would have to start at the bottom. Does that look like a triangle to you? All right. That does not look like a triangle. But what it does look like is a pennant, which is different. It's not the same as a triangle, but it does play similar. A triangle pattern, just use the tool. Look, the tool is right here. If you can't, like, it's showing you how to draw it. It's showing you how to draw it. So if you're going from here to here to here to here, that don't look like a triangle. That's not fitting real well. So what you got to do is you just got to use your markups and let your markups tell you if something is accurate or not. So now you have a nice ascending or descending top and ascending bottom, and you can look for a breakout here. I would do the same thing I said about the other thing. I would not trade this on the 4 hour, especially because it's coming toward the end of the pinch. You would typically want it to break out here, right? If you were looking for like a triangle or a pennant, you would be looking for it to break out earlier. You're not looking for it to come all the way to the end because you're not going to have volume. So what you want to do is you want to come down here to that 30-minute. And now you can start to see where there's some definition. You know what I'm saying? Now you can start to see some definition in this. And that's how I would trade. I would come down to the 30-minute chart and I'd be looking for a move over here. And so I would trade it like a pennant. I would trade it just like that. And I would wait for, you know, some nice breakout, wait for good volume at London to see if you get a breakout. If not, probably US session, you might get a breakout. I have a pennant there being retested right now on a 30-minute. Yeah, exactly. Exactly. So yeah, I would not consider that a triangle, no. But I would consider it a pennant. That makes sense, Zion? Cool. So guys, yeah, I'm just trying to you know, answer a couple little questions for you. And you know, that's all. See how everybody's been. It's what is it, 2 o'clock? Let me go. Y'all want me to give you a little trade setup? How about that? Let me give you a little trade setup for tonight for YouTube. Let's take a look over here at GBP USD. My goodness. Let's look at GU. I'm going to start with the 1 hour. I'm sorry. I'm going to start with the 4 hour chart. And here's how I like to take make a trade setup. All right. First things first, I get my high. I get my low. Right. So I got my high point. I got my low point. That's the first thing I'm going to do. Then I'm going to see, are there structures in between that might give me something on the high side and something on the low side. So probably right there. And so now I'm done with the 4 hour chart. I'm going to come down to the 1 hour chart. So if I have this, now I'm looking at the 1 hour chart. Number one, I got to see here that there's 8:30 in the morning. So if I'm looking for a London trade, because I'm not looking to take this into the US session. So now I have an extreme high, low, and then I got my minors in between. I'm on the 1 hour chart, and I'm going to look and see, can I tighten those zones at all? So now I can look and I can see there's clearly a way to tighten that right there. There's clearly a nice way to tighten that right there. And above, can I tighten that to right there? So now, rather than waiting to get all the way up here or all the way down here, I have now captured the candles in a much smaller zone, okay? But I still have my extreme highs and lows as targets. So now, guess what? If price goes and pushes outside of here, I'm looking for price to get up there. If price goes bearish, I'm looking for price to get there. And either way, I'm happy, because guess why? If it breaks to the bull side, if it goes bullish, that's 160 pips. If it goes bearish, well, guess what? I'm still happy, because, man, that's 99 to 100 pips. So either way, I got good bread coming. All right. So the next thing I'm going to do is I'm going to come down to the 30-minute chart, and I'm going to see, can I find some real definition here? Right. I'm going to see, can I find some real definition? See, I like to bring it back to that reset chart. So I'm not looking at something that's, trying to manipulate the chart. I come in here and I'm looking at this, and this is pretty clear. Right? This is pretty clear. That's real nice. That's real nice. So now I've cut that zone in half. Look at that. I cut that whole zone in half, just like that. Boom. I just cut that whole zone right there in half. So now I have an early entry to the downside, or an early entry off of a rejection. So now I can come in here. I'm looking really good. I'm happy. I'm looking really good with that. And now I can come down to this 15-minute chart, and I can see, is there anything where I can see any rejection? Okay. And so I like that. I can bring that a little bit tighter even, and I can do a zone rather than just a line. I can come down to the bottom side, and can I tighten that at all? Well, man, I could tighten that a lot, actually. So I can come in here and I can tighten that right there. And the same thing, I want bodies and wicks, bodies and wicks. So now I have a zone, and I can look at it just like that. So now there I am. I have a nice trade setup. It's 2 o'clock, it's 2 a.m. And now I'm waiting for price to react right here. I have a big push up, came back in and pushed down, and now it's basing right here, right dead center of my zone. So what I need to happen is I need it to come and push down off to this line or off to the top. And what I want to see happen is I need price to bounce around in here. I need to get a breakout, or I need to get a breakout. Okay. That's easy money right there. That's easy money. So do we want to tighten it up a little further? Now it's up to you. Some people like to trade volume. That's okay. If you like to trade volume, then you want to put a line right here and you really are looking to just scalp from here, boom, take it down just like that. And you're looking at this, that's 7 pips. If it breaks there, that's 19 pips. There's your early entry, just like that. To the upside, what you're looking for is a rejection and a volume push up. And just like that, you'd be looking at 18 pips. So now when I send that out as a trade setup to you, this is what it looks like. I can come in here, I can squat. Now that I'm not marking it up anymore. Now I'm not trying to manipulate the charts. I can make it look nice and clean for you. There's some notes, and boom, there you go. There's a nice little trade setup. That's how I would trade that if I were you. That's how I would trade that. Does that make sense? Now, if you don't know how to take the trade setups that I send, I have a whole video in Trading Get Paid where I teach people how to take these trade setups, how to use the zones. I don't call them buy zones and sell zones. I just use zones, right? And so we react as price reacts. We don't try to force price to do what I want it to do. What we do is we tell price to do what it wants to do, and then we ride the wave. You know, that's all we can do. We can ride the wave. So there's your trade setup for tonight, YouTube. There it is. Yeah, absolutely, Zion, for sure. So that's how you should do it. If price comes down, look, I'll show you one more time. Price comes down off of here and rejects. You get a nice rejection candle here. You should be looking for a buy to here. And look how beautiful the risk reward becomes, right? Look how beautiful that becomes. You get a rejection off of here. Look at that. Remember what I said? You want 2? That's 2.01. Look how beautiful that is, guys. Really, really nice. If it goes the other way, that's okay too. Let's say it breaks to the downside. Well, we don't have to go all the way up with the stop at that point because now we have candles to protect us. So if it comes and it breaks right here, what we're going to do is we're just going to come behind our structure and we're going to come down to the zone. Now you got 1.6. It's not quite 2, but it's 1.6. If it breaks beyond there, it's going to run. It'll come down to here, but you got about a 1.6 right there, and you can take it if you like it. That's up to you. I'm going to leave that up to you. Me personally, I think that we have, look at this. We have a lot of bullish momentum. GBP USD, the dollar is still kind of reeling a little bit from the interest rate news. Probably this is going to go up some more before it comes down. So the likelihood is that I think this will reject and it will push up some. But I don't trade with bias. So I don't want you to be trading with bias. I don't want you to be trying to force the market to do what you want it to do. I want you to just let the market do what it wants to do. You know what I'm saying? So there you go. Hopefully you got your trade set up in there. Screenshot it, do what you want to do, and then post on YouTube tomorrow. Post in my comments how this trade went for you tonight. And you know, if you do it the right way, I'm telling you, you're gonna have a winning trade. You're gonna have a winning trade. So make sure you wait for volume. Make sure you don't just jump the gun. Make sure you wait for a good volume candle, like an engulfing. Oh, excuse me. Make sure you have like a nice engulfing candle entry, or at least like a pin bar rejection here. And once you have volume, then boom, you're good to go. You're good to go. So, well, guys, I figure I'll give you a little trade setup, answer a few questions. I just wanted to spend some time with YouTube tonight. And it's been a little while. So I just wanted to spend a little bit of time with YouTube tonight. And I hope this live helped you. Hope you got something out of it. Stay tuned. I got some really, really good content coming. The next few videos I drop, I told you in the beginning of this live session, I've taken it and made it my personal mission to make sure beginners are getting paid. So if you're a beginner or if you're still struggling, stay tuned on the channel, because I got like strategies coming that are easy strategies for you to be able to go and win, you know, easy strategies for you to be able to win with. And I want to see you guys win. I want to see beginners win. You should not have to be trading for 5 years before you make money. You should not have to trade 2-3 years before you make money. You should be able to make money, you know, as a beginner. So I want to see that happen. So I'm going to help you. I'm going to send out strategies. And man, to be honest with you, you should just go and check out the comment sections. Go in YouTube and check out my comment sections and just look and see what the TGP students have to say. Because the truth is, they're doing the marketing for me. You never see any of my videos boosted into the YouTube, you know, ads. You don't never see me boosting IG posts and all that stuff. I don't really do a lot of that. I don't do that stuff. I'm just relying, my marketing is my students telling you guys how much success they're having and how much they enjoy and get out of TGP. So if you want to join and you want to become like one of my students, I'm getting messages of people going full time. That's to me, that's the ultimate success. When I'm getting messages of people who are quitting their jobs, quitting their jobs because they're trading, quitting their jobs because they're making money trading. That's the ultimate success, you know? So that's what I'm getting. I'm getting people who are quitting their jobs because they're making money. I'm getting people who are leaving other communities to come to TGP because what they're getting here is real solid trading. Our live classes are just crazy. Live classes are wild, awesome. The teaching is so good. The community, people are helping one another. The trade setups for the whole year so far, my trades that I send out, every time I take a trade, I send it out to the team. For the year, we're over 90%. For the whole year, we're over 90%. Nobody else in the industry is posting that kind of number. All right. And I'm not like boasting, and that's not really my style like that. But I'm just telling you, nobody else is posting over 90% wins. We are killing the trade setups. So all you really got to do is join TGP and take my trade setups, and boom, there you go. Beginners get money, you know? So jump on board, go to tradinggetpaid.com. Let me go ahead and put that in the chat. Yep, you can go right there to tradinggetpaid.com, and links in the description, links in the bio. Go there, become a student. There's no contract, there's no recruiting. You ain't got to go talk to your family and your friends and recruit 6 people. You ain't got to build no teams, none of that. It is just straight up trading. That's all we do. We trade, we trade, we trade, we trade, we trade. I send trade setups almost every night, and we're getting really solid wins. All right, I'm getting tired, so I'm getting ready to go to bed. But I wanted to spend some time with YouTube. Me personally, I've already sent a trade setup out to TGP. I'm going to bed and I'm trading US in the morning. I'm going to be trading gold, so I'm going to be sending a gold trade setup to the team in the morning. And so I'm getting ready to hit the bed and get up and trade some gold in the morning, because I'm looking forward to that GDP announcement. Once that's done, gold's going to give us some bread. So if you're a TGP member watching right now, stay tuned. Tomorrow, probably around 9 o'clock, I'm going to send a trade setup out for gold. So if it pans out, let's see, but I think so. Other than that, I love you guys. I appreciate you, man. I love the YouTube fam. Definitely appreciate you guys watching and spending time on the channel. We're almost at 60,000 subs. Help me get to that 60,000. Like the videos, comment on the videos, subscribe if you're not already a subscriber. Share the content. Help me get this content out to more people. 60,000 is like right here, right here. We're almost there. So help me get to that 60,000 mark. All right, guys. See you later. See you in the next one.